Morning at NTV.
Welcome back to Morning at NTV, and thank you for staying with us. Our next conversation is centering around the Deposit Protection Fund. What happens to your money when a bank collapses? That's the $64,000 question that Mrs. Julia Claire Olima Oyet is going to be answering. She's the Chief Executive Officer of the Deposit Protection Fund, Uganda. Now, I'll just give you a brief background or preamble, if you will. The Deposit Protection Fund of Uganda, DPF, which is also referred to as the fund, was established as a legal entity following the enactment of the Financial Institutions Amendment Act of 2016. Now, the process of operationalizing the fund commenced in April of 2017 with the inauguration of the board of directors, like the Chief Executive Officer, Mrs. Julia herself, and the others. So she's right here in studio to help us expound on this matter. Many thanks once again for joining us right here in Morning at NTV. Very good morning.
You're welcome.
We are not doing the handshake anymore. Do you do the whole handshake?
Yeah, we can. yeah.
So please tell us, what is the Deposit Protection Fund of Uganda? Help the viewer understand.
Yes, thank you very much, viewers. The Deposit Protection Fund of Uganda is a government of Uganda agency that has been put in place to ensure that in the unlikely event that the bank in which you have put your deposit is closed for liquidation purposes, the fund will pay you up to the protected amount, which is up to 10 million shillings, so that you don't lose everything, at least you gain a good percentage of your money.
What is a contributing institution in this scenario?
A contributing institution is any institution that is regulated by the Bank of Uganda. Once a financial institution is regulated by the Bank of Uganda, that financial institution automatically contributes to the Deposit Protection Fund, and therefore we call that institution a contributing institution. Yes.
And yeah, go ahead.
The contributing institution pays premium to the fund, and that is the money that we get. We invest and we keep it safe, so that in the unlikely event that your bank in which you're depositing money is closed, we get this money and pay it to you.
Now, provided, here's a very, very grim scenario, that I'm in an institution that is not contributing to the Deposit Protection Fund. What would be my fate in the event or the likelihood of this institution collapsing financially? What would happen to the depositor, to the depositors in that case?
Okay, that's a very good question, and that is why I think we should try to make sure that we deposit our money in institutions that are regulated by any ambit of the government of Uganda.
So you first do some research.
You first do some research, make sure your money is in an institution that is regulated by an ambit or an organ of the government of Uganda. Now, the Bank of Uganda is regulating a certain portfolio of the institutions that are operating within the financial sector, and that would be the commercial banks, the credit institutions, and the deposit-taking microfinance institutions. So those ones will always be protected, yes, by the Deposit Protection Fund.
And what would be the immediate ramification to the depositor, just in case this bank collapses or this microfinance institution collapses, yet it hasn't been remitting to the DPF?
You ask very good questions. Now, a contributing institution must remit that premium to the DPF. And I'm happy to say all contributing institutions remit that money. We have not even had any cases where we've had to follow up financial institutions. They know their obligation and they make sure they pay within the stipulated time.
Let's talk about how the Deposit Protection Fund is being funded itself.
Yes.
Because some people have these, some people say it's being run by Bank of Uganda, others are saying it's a government entity. Help us iron that out.
Okay. Now, there's a certain confusion about the Deposit Protection Fund in relation to the Bank of Uganda. And this is because 20 years ago, a fund was created in the Bank of Uganda. That fund was just an account. It was a pot of money into which the contributing institutions paid in premiums, and it sat within the Bank of Uganda. But like you rightly said, in 2016 that changed, and the government of Uganda decided that this fund is not just going to be a pot of money, but it's going to be a pot of money that's managed by a board, managed by management and staff, to ensure that while this pot of money is there and sufficient, we have to have mechanisms to get that money out and pay you as fast as possible, which might not have been the case if it was just sitting as money in an account in the Bank of Uganda. Yes.
And of course, this money is invested in government risk-free treasury.
Yes.
Help us break those down.
Okay, the money that we have as the Deposit Protection Fund, around 98% is invested in those treasury bills and treasury bonds. And the reason why we do that is because for the Deposit Protection Fund, safety of that money is paramount for us, because we don't want a bank to collapse and we don't have the money. Safety and liquidity. These treasury bills and treasury bonds can easily be liquidated, and that is the policy of the fund.
And I also understand even the money that is invested is also reinvested. Yeah. Tell us about that process.
Yes, the money that we get as interest is reinvested, and that has really helped to boost the fund. As I speak now, the fund is standing at around 700 billion shillings. We're entering into 1 trillion, hopefully by the end of a few years. We should be hitting the 1 trillion mark, and that is very comforting to the depositor.
Very comforting indeed, even for me right here, who is with this Stanbic Bank.
Okay.
But where does the Deposit Protection Fund keep the money you get from the contributing institutions?
Yes, where we keep that money, first of all, the contributing institutions pay that money into the Bank of Uganda. That account that I described is still sitting in the Bank of Uganda, but we are monitoring it and managing it. Once that money comes into the Bank of Uganda, we have an investment manager who ensures that that is invested in treasury bills, treasury bonds, and that interest is what we again plow back into the DPF to help it to grow. Yes.
So help us understand, who are covered by the Deposit Protection Fund?
Yes. Who is covered by the Deposit Protection Fund? If you're a depositor in an institution that is regulated by the Bank of Uganda, you are automatically covered by the Deposit Protection Fund. And I want to state that no depositor has to pay any extra money to get this insurance. This is insurance which is given to you by the mere fact that you're a customer of the bank.
We would also like to know, are all financial institutions in Uganda members of the Deposit Protection Fund of Uganda?
No, not all financial institutions are members. It is only those that are regulated by the Bank of Uganda. We have other institutions that fall under UMRA, for example, so those would be handled by that organ of government. So there are different organs of government overseeing various aspects of the financial sector. We have Insurance Regulatory Authority that oversees the insurance sector, and so on. So the government has organized itself in such a manner. Yes.
So how much compensation am I entitled to in case my contributing institution collapses?
Yes. In the unlikely event that your financial institution collapses, and I want to emphasize why we say unlikely. We say unlikely because the Bank of Uganda has so many mechanisms to ensure that if your bank is starting to experience problems, we don't have to enter into an outright liquidation where we have to pay you. They have tools like purchase and assumptions where your deposit will just be transferred to another bank, in which case you continue banking in a seamless manner. So this outright liquidation is the last resort. That's why we keep saying it's unlikely. It is the last resort by the Bank of Uganda. So now, if your bank is closed, you'll be entitled to up to 10 million shillings, but that is for you as a customer, not on each account. So our insurance is per customer, per bank. Yes. So if you have 2 bank accounts and they're in your names, personal bank accounts, and in one account you have 5 million and the other account probably you have 10 million, so you have 15 million, would pay you up to 10 million. That is assuming that you don't have a loan which is not performing. If you have a loan that's not performing, we shall offset that.
You use that money to reservice that loan first.
Yeah, to recover the loan. Why? Because you have also contributed to the downfall of that very institution.
I'd also like to know, in other words, if I had 100 million on my account, I'd still be entitled to only 10 million?
Yes. Now,
wow,
a very good question. If you have 100 million, you'll be entitled to up to 10 million.
Jesus.
But the balance of the 90 million, you will still get once the liquidation process now starts taking place. So depending on what is recovered, you'll get still an amount out of that, the 90 million that we haven't paid you. This 10 million is it is like an instant remedy to you, not to get stranded completely. And also I want to emphasize that deposit insurance has been put in place generally to protect the small, unsophisticated depositors who are not able to read financial statements of financial institutions. They just take their money to any bank. But for you who has 100 million, you are the elite. You should be reading the financials, reading the market, and putting your money in the right place. And ultimately, that's how deposit insurance even helps to improve risk management systems within the banks, because now they are conscious that the depositors are very conscious.
Indeed.
If I post a loss, it can have repercussions on me. And that's how deposit insurance and the banks all work together to ensuring stability in the financial sector.
Mrs. Julia, here's a very compelling scenario.
Yes.
In the event that the liquidator doesn't actually recover all the money they wanted to, what would that translate to as far as the depositor getting their money is concerned? Remember, I have 100 million, you've given me 10, I'm waiting for the 90, but the liquidator has failed to actually recover all the money from the defunct bank.
In that scenario, it would be a loss or the risk that the depositor now has to absorb. And that is why the depositor has to be very keen on what is happening out there in the market. And that's why I'm emphasizing that depositors must be very keen about the performance of their financial institutions, because at the end of the day, there is that risk that you have actually highlighted very clearly. Yes.
How soon can a customer get their money after this debunked bankers closed?
Okay. According to the Financial Institutions Act that guides the operations of the DPF, we are given 90 days to pay that money. But now that we have a board, a very active board, and a very active management team, we want to reduce that time to what we call T+0, which means a bank is closed today and we pay you tomorrow. And that is why we're putting in place a system which we call a payout system. It's an IT system. We're going to be able to connect into the banks, get information real time, and that is why we're asking Ugandans to update their information so that the banks have your national ID number, they have an alternative mode of payment that we can use to pay you as fast as is possible.
What if some depositors don't claim their money within 90 days? What would happen to them? Is this payment process a continuous one or based on the time frame?
Okay. Now, the 90 days is the time we should start paying. Because once we've started paying, we'll keep paying. There is no closure on the time period within which you can claim that deposit. So you can come at any time to get your deposit. But of course, it's better to get your deposit as fast as possible, because money today has more value than money tomorrow. So we would encourage depositors to come as fast as possible to get their money instead of waiting for 20 years. It loses value.
Indeed. Let's talk about the depositors themselves. Do depositors need to remit to the Deposit Protection Fund of Uganda?
Remit any money?
Any money, yes.
No. The depositors only have to put their savings and their money in their respective financial institutions. They should not pay any additional money for this insurance. Yes.
So how do I know if I'm insured?
Yes. How do you know if you're insured? Make sure that when you're depositing with any financial institution, you see the license, that it is licensed by the Bank of Uganda. And now we have posters that we have put up in all the contributing institutions saying that your deposits are protected up to a 10 million mark. So look out for some of those posters, and look out especially for the license that the Bank of Uganda has issued to that financial institution. Because if that license is not there, then you're risking your money to some extent, unless it's regulated by another ambit of the government. Yes.
Some banks continue to remove some little money from depositors, which they remit to the Deposit Protection Fund. Is that right?
I'm not aware of that.
But it's happening.
It should not happen. What could be happening is that the banks, because this is a cost to the banks, so they include it in their costing model, and it could be embedded little bit in the charges, but not to the amount that it is not equivalent to that amount that they pay into the deposit fund. It can just be a small operational additional charge, and it should never appear on your statement as this is what we're deducting because we're taking the premium to to the DPF. No, it is just a small little extra cost that is embedded within your bank charge.
If it's been happening, it's wrong.
Oh yes, I'd like to advise depositors that if you look on your bank statement and you see any debit which is related to the Deposit Protection Fund, please raise an alarm. Come to the Deposit Protection Fund and we shall address that.
So let's iron out that issue. What kind of deposits are covered by the the Deposit Protection Fund of Uganda?
Yes, we cover all deposits. We cover your current accounts, we cover your savings accounts, and we cover your fixed deposits. All those deposits are covered by the Deposit Protection Fund. Yes.
Any parting words before we leave?
The parting words is first of all to thank you for hosting me on this show.
Amazing, thank you for coming.
Yes, but to encourage Ugandans that now we have a project where we're trying to update information. The contributing institutions are updating information. Please support the financial institutions because that is how we shall get your details and that is how we shall ensure that we pay you as fast as is possible in the unlikely event that your financial institution is closed. I would also like to say that when the banks ask for an alternative mode of payment, you are not being forced to open another bank account. Most of us have mobile money account numbers. That is going to be sufficient for us. Give them your mobile money account number and we shall use that to ensure that you do not suffer in that unlikely event.
The Chief Executive Officer of the Deposit Protection Fund of Uganda, Mrs. Juliet Claire Olima Oyet. She was so kind to make time to come to the studio and enlighten us on this issue. Many people have been wondering what happens in the event that my bank collapses. What do I do? There is a Deposit Protection Fund that is independent from the Bank of Uganda. It's a legal entity that works on its own. So they have more than 700 billion Uganda shillings. Now they are almost making $1 trillion. Thank you for coming. Elbow?
You're welcome.
Right about now, I'd like to link to my reporter, Stephen Imbide, who is still in Muyenga, but this time around is going to be telling us what is happening on the ground. A very good morning once again, my brother. What's the latest?